Welcome to TalkTickers, the earnings call podcast, where we try to break down these complex reports and give you the information you need to make good decisions for your portfolio. You know, earnings calls, they can be kind of dry and, well, frankly, a little bit intimidating.
They can be a little scary, lots of jargon, but, they're really the heartbeat of the market. We get to see what's actually going on beneath the surface of these companies.
Exactly. And today, October 29th, 2024, we're going to be looking at Royal Caribbean's Q3 performance. And this one is pretty interesting. It's got Wall Street talking because, on the one hand, they absolutely crushed expectations, but then on the other hand, you've got Hurricane Milton that's really put a damper on things.
Yeah, it's like a tale of two quarters, right?
Yeah.
You've got the sunshine and smooth sailing of Q3, and then the potential storm clouds gathering on the horizon for Q4.
Yeah, so today we're going to dive deep into their earnings call transcript and also look at their recent stock performance. We'll be pulling out those key takeaways for you, breaking down their financial health, and exploring what it all means for you as an investor.
So by the end of this deep dive, you'll know whether Royal Caribbean is on course for clear skies or if they're headed into choppy waters.
All right, so let's start with that Q3 performance, because a 7.9% year-over-year net yield growth, I mean, that's something to be excited about.
Oh, yeah, absolutely. That's significant growth, even for a company like Royal Caribbean, which has historically been a strong performer.
Now, for those of us who maybe aren't fluent in Wall Street lingo, what exactly does that even mean, net yield growth? What drove that?
Okay, well, imagine this. Every passenger on a Royal Caribbean ship, they represent potential revenue, right? So net yield, it measures how effectively the company turns those passengers into profit. And in Q3, they did it exceptionally well. It was a combination of higher ticket prices, people are willing to pay more to get on those ships, and strong occupancy rates, so the ships were full.
So basically, people are really eager to cruise right now,
Yeah.
and they're willing to pay a premium for the Royal Caribbean experience.
Yeah, exactly. The demand is definitely there.
Okay, so they're filling the ships, and they're charging more for tickets, but what about all that spending once you're on board? You know, the drinks, the excursions, all of that.
Well, Royal Caribbean highlighted a really interesting trend in the call, and that's the rise of pre-booking.
Oh, yeah, you mean instead of waiting till you're on the ship to book like a spa treatment or a shore excursion?
Exactly. They're getting much more sophisticated with their pre-cruise upselling,
Oh.
particularly through these AI-driven channels.
So you're saying like I'm on my phone and I get a personalized recommendation for an underwater scooter adventure in Cozumel.
That's exactly it. And it's all happening before you even step foot on the ship.
It's like having a personal concierge in your pocket who knows exactly what you want and is just, subtly nudging you towards spending a little more.
Yeah, and the results are pretty impressive. They reported that guests who pre-book their onboard activities, they end up spending more than double compared to those who just wait.
Wow, more than double.
Yeah, it's a smart strategy, and it actually taps into a bigger trend in the travel industry. People are looking for curated experiences. They want to know what they're getting and have everything planned out. Royal Caribbean's just doing a really good job of meeting that demand.
So they're filling a need,
Yeah.
and they're making a profit while doing it. And speaking of curated experiences, we have to talk about their perfect day strategy.
Oh, absolutely.
We've all heard about the success of Perfect Day at Coco K, their private island in the Bahamas.
Mm-hmm.
But they're not stopping there. They're doubling down with Perfect Day at Mexico, set to open in 2027.
Yeah, this is a big project. They're essentially building their own destination, right? Complete with the thrill rides, luxurious amenities, and that signature Royal Caribbean kind of flair.
But the question is it going to be another Coco K? Because that was a huge success.
Yeah, the bar is high.
So what are the expectations for this new project? Is it going to pay off?
It's still early, but I think there are reasons to be optimistic. They've chosen a location that's really accessible, so you can get there from both Eastern and Western Caribbean itineraries. And they're using that proven Coco K formula, a blend of high-energy thrills and luxurious relaxation. But, with a local twist.
Okay, so we're talking tequila tastings on the beach, authentic Mexican food.
Exactly.
Okay, so imagine you're sitting in Dallas, right? Dreaming of a getaway. You just hop on a quick flight to Galveston, then you're on a Royal Caribbean ship, and boom, you're on a perfect day adventure in Mexico.
Yeah, it's a pretty enticing proposition, right?
It is. And it brings up another interesting point that they made in the call. Texas.
Oh, right. They see a huge untapped potential in the Texas market.
Yeah, they said that Texas is actually a bigger market than Florida when you look at potential cruise passengers.
which is kind of mind-blowing when you think about it.
It is. It is.
There are all these Texans who haven't experienced cruising yet.
And Royal Caribbean's betting that Perfect Day at Mexico, along with their new Royal Beach Club in Cozumel, is going to lure them in.
Yeah, they're playing the long game, investing strategically to create this whole cruise ecosystem.
It's like they're building their own little cruise empire, one perfect day at a time.
Exactly. But, like any empire, there are always challenges.
Oh, always.
And for Royal Caribbean, one of those challenges came in the form of Hurricane Milton.
Yeah, Hurricane Milton, I mean, it's a reminder that no matter how good your plans are, you can't control everything.
Nope.
And this hurricane, it's estimated to have a $1.14 negative impact on their Q4 earnings.
Yeah, it might seem like a small number at first glance, but
when you consider that they were already facing some pressure from the slowing economy, that $1.14 hit starts to look a lot more significant.
exactly, we're talking about a 10% dent in their projected earnings. And it really raises the question, how are they going to make up for that?
It's a good question. And it's a reminder that we really need to dig into the details and not just focus on the headline numbers. A great Q3 is fantastic, but it doesn't make them immune to these external shocks or a struggling economy. And speaking of the economy, let's talk about their 2025 outlook. They're projecting earnings to start with a $14 handle, which sounds pretty optimistic considering everything that's going on.
It does, doesn't it? But they were also quick to emphasize their moderate growth mantra.
Okay, so what does moderate growth even mean in this context?
And how does it translate into concrete actions for the company?
Well, those are the questions we're here to answer. And to do that, we need to take a closer look at their strategic roadmap for 2025.
So for 2025, they've got some exciting new ships hitting the water.
Yeah, like the Star of the Seas. I think that one's coming in Q3, right?
That's right, Q3. And then they've got the Celebrity Excel that's joining the fleet in Q4.
Oh, and don't forget Utopia and Silver Ray.
Right, those will be sailing for a full year in 2025.
So a lot of new berths to fill, which is great for revenue, but it also means higher costs.
Yeah, there's always a trade-off.
They talked about dry dock days, the time ships spend in for maintenance and upgrades. That's going to be a factor in 2025, both for those new ships and for modernizing some of their older vessels.
It makes sense. You got to keep the ships in tip-top shape, right? Think of it like regular car maintenance. It prevents those big, costly breakdowns down the road.
But it does require an upfront investment. So how do they plan to manage those costs, especially with a potential economic slowdown?
Well, remember those AI-driven yield management tools we talked about?
The ones that personalize those pre-booking recommendations.
Yes, exactly. Those are going to play a big role in managing costs. These systems are constantly analyzing demand, pricing, the economy, all of it.
So it's like having a really smart autopilot that can navigate through any economic turbulence.
That's a great analogy. So even if people start tightening their belts a bit, these tools can help Royal Caribbean adjust pricing and promotions to keep those ships sailing full.
Okay, so they can be flexible. And we can't forget about all those pre-cruise upselling tactics, right?
Right. If people are maybe cutting back on big vacation expenses, they might be more willing to spend on smaller, memorable experiences once they're on board.
So maybe you skip that expensive shore excursion, but you splurge on a couple's massage or a nice dinner at a specialty restaurant.
Exactly. It's all about capturing that discretionary spending, even in a slower economy.
And Royal Caribbean's doing a good job of creating those wow factor experiences that make people want to spend.
Absolutely.
They're diversifying their revenue streams and catering to different budgets. And don't forget their global reach, right? They're not just reliant on the U.S. market.
That's a key advantage for them.
Yeah, they've got ships all over Europe, Asia, the Caribbean.
That diversification really helps protect them if one region's economy starts to weaken.
So they're well positioned, even if there are some storms on the horizon. And speaking of storms, let's go back to those Q3 results for a second. That impressive 7.9% year-over-year net yield growth we talked about, a big chunk of that came from their private destinations.
Yes, those beautiful island escapes.
Where you can zip line and swim with stingrays.
Sounds pretty good right about now.
Right. And it turns out those places aren't just fun. They're really profitable.
Coco K especially has been a huge success for them. It shows how they're creating these high-margin experiences that really complement their cruise offerings.
And they're clearly hoping to replicate that success with Perfect Day at Mexico. It's all part of that trend of experiential travel we keep hearing about.
People want more than just a place to stay. They want those immersive experiences.
And Royal Caribbean has given them exactly that.
And it's not just about attracting new customers, it's also about keeping those existing customers happy. They mentioned that their loyalty guest numbers are up 20% compared to last year.
Wow, 20%.
Yeah, repeat business is huge for any company, but especially in the cruise industry.
because those loyal customers tend to spend more, book longer trips, and they tell their friends.
It's like a positive feedback loop. They're building a loyal fan base that's driving their growth.
And with those new ships and destinations coming, they're attracting even more first-time cruisers.
Exactly. So they're growing the market and taking a bigger piece of it at the same time.
Okay, so we've covered a lot of ground here. What are your main takeaways so far?
Well, to me, it's clear that Royal Caribbean's doing a lot of things right. Their financial performance is strong, they're seeing high demand, they're pricing things strategically, and those private destinations are a real moneymaker.
And they seem to be in a good position for future growth, even with the economic uncertainty.
Yeah, that moderate growth approach, their global reach, those AI tools, it gives them a lot of flexibility to adjust to whatever comes their way.
But we can't forget about Hurricane Milton and that impact on Q4.
Right, it reminds us that even the best laid plans can be disrupted.
And it makes their ability to adapt and change course even more important. So, stepping back a bit, what does all of this tell us about the cruise industry as a whole?
Well, cruising is definitely back in a big way, isn't it? After the pandemic, people are ready to get back out there and sail, and Royal Caribbean's performance is a pretty good indicator of that pent-up demand.
It's like they're riding this wave of post-pandemic travel enthusiasm.
And they're pushing the boundaries, investing in new ships, new destinations, new technology.
So what does all this mean for the investor, the person listening to this right now? What should they be paying attention to as we move into 2025?
Well, first of all, keep an eye on those demand trends. Are booking volumes and prices holding steady? How are they managing occupancy on those new ships?
Okay, so those are the key metrics to watch. And what about costs? Are they keeping those under control, especially with all the investments they're making?
Yeah, margin expansion is crucial for long-term profitability. And of course, we have to consider the economy, right?
How are they responding to those potential headwinds? Are they adjusting their pricing and marketing strategies?
Exactly. Staying flexible is key in a dynamic environment like this.
And let's not forget about the competition.
Oh, right. How are they performing compared to other cruise lines? Are they maintaining their market share?
It's a competitive industry. They can't afford to get complacent.
Agreed. They're doing a lot of things right, but they need to stay sharp.
All right, I think we've done a pretty thorough job of breaking down Royal Caribbean's Q3 report and their outlook for 2025. What are your final thoughts?
Well, I think Royal Caribbean's really impressive in the way they're thinking about the future and actually executing on their plans. They're focused on growth and they're creating value for their shareholders. That's clear.
Yeah, and they're doing it by being financially smart, but also by really putting the customer first. You know, they understand that people want those wow experiences, the things they'll remember and talk about, and that keeps them coming back for more.
Exactly. And that's a good recipe for success, not just for cruise lines, but for any business, really.
All right, so we've shared a lot of information with you today, but now we want to hear from you. What stood out to you? What questions do you have?
Because the real learning happens when you take this information and start applying it to your own investments.
So go explore, dig deeper, and we've put some links in the show notes for you. You can find the full earnings call transcript, and you can see how Royal Caribbean stock has been performing.
And one last thought to leave you with. Can Royal Caribbean keep up this incredible growth, especially with the economy being a little shaky and the competition heating up?
It's a tough question, but it's the kind of question that investors need to be asking.
Because those who can adapt and innovate, those are the ones who are going to come out on top.
Well, that's what we're all about here at TalkTickers, giving you the insights and the tools to make smart decisions. So until next time, keep learning, keep exploring, and keep those portfolios growing.
We'll see you back here soon for another deep dive.
See you then.